What's up, investing aliens? Eric here. Google earnings are out, Alphabet. So they beat on top and bottom lines. They also raised guidance and a huge buyback announced as well. I'm going to cover everything you need to know here on Google earnings in less than 10 minutes. So grab a seat, grab some popcorn, sit back. I got you covered. So GAAP EPS, $1.17, that beat by 10 cents. Revenue of $69.79 billion, beat by $950 million. But listen to this, $70 billion share buyback. Now that is absolutely huge. $70 billion with a B. The stock's up about 3.5–4% right now after hours. We'll look at a chart later as well, so definitely stay tuned. So we went through the EPS and the revenue. Let's look at the different segments. So YouTube advertising, $6.69 billion versus $6.6 billion, so a beat there. Cloud revenue, profitable for the first time. I'll cover that here in a second, but $7.45 billion versus $7.49 billion, so a slight miss there. Traffic acquisition cost, TAC, $11.72 billion versus $11.78 billion. This is according to Street Account. So the revenues rose 3% from $68 billion a year ago. Of course, the bar was pretty low for a lot of these big cap tech earnings. I just did a video yesterday that kind of covered a primer of what to expect. And some of those numbers you saw in there, pretty low. And I'm going to get to my thoughts here later on in the video. I want to go through these highlights. So ad revenue beat analyst expectations, but fell from a prior year to $54.55 billion. YouTube ad revenue stayed in line with expectations, also declining from a year ago. And search and other revenue came in at $40.36 billion. That was actually up slightly from a year ago at $39.62 billion. Now, this is important. I'm going to cover this in a little bit of detail here. So to grapple recent weakness, what the company's been doing is it's been closing down a bunch of offices and laying off a bunch of people. 12,000 employees, and of course they have a lot of employees, so that's about 6% of its workforce. That's just in January alone. And the CFO announced a multi-year cut to things like real estate, employee services, and equipment. So net income dropped to $15.05 billion from $16.44 billion a year earlier. And Google is finally generating profit in its cloud computing business. Of course, it competes with Microsoft Azure as well as Amazon Web Services. And cloud across the board for public cloud services is down. And that's pretty normal in this type of environment. What's happening is you're going to have organizations spend less money. They're going to push deals back further. In addition to the overall pullback in ad spending, YouTube is facing heightened competition from TikTok, also Instagram as well. YouTube Shorts has 50 billion daily views, which seems like a pretty big number to me. Revenue and other bets, which includes things like Waymo. So Waymo was at $288 million. That's a steep decline from $440 million a year ago. So CEO quote here, "We are pleased with our business performance in the first quarter, with search performing well and momentum in cloud. We introduced important product updates anchored in deep computer science and AI. Our North Star is providing the most helpful answers for our users, and we see huge opportunities ahead, continuing our long track record of innovation." So Q1 consolidated revenues, $69.8 billion. That's up 3% a year ago, or 6% in constant currency. We remain committed to delivering long-term growth and creating capacity to invest in our most compelling growth areas by re-engineering our cost base. I wanted to cover this. This is pretty important. So in January 2023, we announced a reduction of our workforce. As a result, in the first quarter of 23, we recorded employee severance and related charges of $2 billion. I mentioned in the last video that this could be something to look for. So $2 billion representing the majority of expected costs associated with this action. In addition, we are taking actions to optimize our global office space. And as a result, we recorded charges related to office space reductions of $564 million in the first quarter of 2023. We may incur additional charges in the future as we further evaluate our real estate needs. And I expect Google to probably cut more real estate and probably cut some more employees as well before this is all over. So I'm going to share some overall thoughts about Alphabet, if it's a buy now or not. And I'm also going to look at a chart, so definitely stay tuned for that. So Cloud Group has turned profitable on an operating basis after showing losses for more than 3 years. This is big news. Google has been pouring money into its cloud computing business to compete with Amazon and Microsoft. Now, I shared this story before, but I have a friend who actually went to Google Cloud Platform and was lured away from a competitor, and they paid him a lot more for base salary, and they gave him a pretty attractive stock-based compensation plan as well. So Google has been dropping money into the cloud business, trying to grow it, trying to catch up with Amazon and Microsoft, and it's good that they're finally profitable. The segment generated $191 $141 million in operating income on $7.45 billion in revenue for the first quarter. Google's been trying to win business from big corporations and government agencies that are deciding between major tech vendors as they move from traditional data centers to cloud. So Alphabet first started disclosing cloud revenue in 2020, and they've been at loss ever since until today. So when you look at those impairment charges and that reduction in headcount as well as office space, you look at this earnings report overall, what it's telling us is that they're getting close. They probably already have bottomed, and you're going to start seeing positive growth momentum from here. Now, of course, we go into a deeper recession, that might not be the case, but this stock is up about 25% since the lows back in November of 2022. So I am long on Alphabet, and I think that the future is bright for the company. They've made a lot of really smart moves to get them better positioned for profitability to kind of ride through the storm. And of course, there's no guarantee that the end is over, but I think if it's not, it's pretty close if it hasn't already happened. So you can see in early November of 2022, this stock got down to about $83, and it ripped all the way up here to $108. We've really had some strong resistance around this $109 range. So we had a double bottom here. It ripped, it gave pretty much all that back, and then it ripped again, and it started to fade here recently. You can see that after hours right now it's up. You can see right now it's up about 3.91%, right back at that $108 level. You're probably going to get heavy resistance around this 108, 109. I think there's a good chance if the market holds up tomorrow that you push through that. So let's go back at a chart here. I'll show you where I think it could go. So $109.17 in early April, and it started to kind of roll over. What's going to happen here? You can see already post-market, it's at $108.10. That's this blue line right here. Now this R2, these are Fibonacci's. This is resistance Fibonacci R2. This is about $110. I would expect it to come up in that range and probably see some more resistance. Of course, the market stays bullish and keep running. The big thing that I look at right now, guys, is we're going into a seasonally weak period for the market. You know, sell in May or sell by May and go away. Now, of course, if all these companies have strong earnings, you could see a lot of these stocks continue to pop higher. And I think there's a good chance by end of the year, the markets are higher than where they're at now. But the market, when you look at the risk reward, I think there's a good chance you trade sideways here for the next several months over the summer months. It's generally lower volume. People are on vacation with their kids out of school and so on. So do I like Google long term, even at these levels? I do. You know, could it come back and pull back at some point, you know, maybe 2 months from now? I think that's possible as well. So that forward PE is around a 21. Market cap is a $1.35 trillion. I think you'll probably see a pretty strong year in 2024, assuming the overall economy gets stronger as the year goes on. So if you're in our Discord community, we were buying this stock under $100, DCA dollar cost average. Of course, now if you look at it at $108, $109, it's not crazy expensive. I still think it's a quality company. I think you'll make money if you invest even at these levels. But of course, I liked it a lot better under $100 a share. And I encourage you to join our Discord community. You can check that out by visiting patreon.com/firedupwealth. I appreciate your time and attention. Have a great rest of your day. See ya.